Are you confused between investing in the stock market directly or choosing mutual funds? In this video, I'll break it down in simple terms so you can decide which option is better for you. When you invest directly in the stock market, you buy shares of individual companies. Pros: high returns if you pick the right stocks, full control over buying and selling. Cons: high risk, requires market knowledge, time, and research. For example, if you invested in Infosys in the early 2000s, your wealth could have grown massively. But if you picked the wrong company, you could lose most of your money. Mutual funds, on the other hand, pool money from many investors, and a fund manager invests it into a mix of stocks, bonds, or other assets. Pros: diversification, professional management, lower risk compared to individual stocks. Cons: management fees and returns might be lower than directly investing in the best performing stocks. For example, an equity mutual fund spreads your money across 40-50 companies, reducing the risk of losing everything. So, which one is better? If you have knowledge, time, and a high-risk appetite, stock market can give better returns. But if you're a beginner, busy professional, or want lower risk, mutual funds are a smarter choice. The truth is, you don't need to choose just one. You can start with mutual funds for safety and slowly learn to invest directly in stocks. What do you prefer, stocks or mutual funds? Let me know in the comments below. Don't forget to like, subscribe, and share this video for more simple money and investing tips with Wealth with